For decades, the US dollar was the undisputed king of global finance, the bedrock of the world's reserves. But in 2024, we witnessed a historic crossover event. For the first time since 1996, central banks' combined gold reserves now exceed their holdings of US Treasuries. This isn't just a change on a balance sheet. It's a profound symbol of a shift in how the world manages its wealth. The dollar's share of global reserves has fallen to a 30-year low of 56.3%, while gold's share has surged to 18%. Central banks aren't buying gold for speculation. They're buying it for durability, neutrality, and sovereignty. Think of gold as the ultimate neutral asset. It cannot be frozen by sanctions or devalued by one country's monetary policy. Emerging market central banks are leading this charge, viewing gold as a safe haven in an increasingly uncertain world. This massive accumulation signals a declining confidence in the dollar's role as the sole global store of value. But the shift isn't just about what's stored in vaults. It's also about finding alternatives for global trade. While central banks are diversifying into gold, global businesses are diversifying their trade into other currencies. The Chinese yuan, also known as the renminbi, is rapidly awakening as the currency of choice for international commerce. In just 2 years, the yuan's share of global SWIFT payments has skyrocketed by 75%. Cross-border settlements in the currency have exploded, growing 35% year over year to over 10 trillion RMB. This isn't a government mandate. It's the free market responding to a need for alternatives. For example, major trade partners like Brazil are now settling transactions directly with China in yuan and real, completely bypassing the dollar. This momentum creates a powerful, self-reinforcing cycle. The more the yuan is used for trade, the more central banks hold it in reserves, which in turn encourages even more trade use. The world's largest trading nation now has a currency that is ready for global business, and that changes everything. But to truly challenge the dollar's dominance, these nations need more than just an alternative currency. They need their own infrastructure. This shift away from the dollar isn't happening by accident. It is organized, deliberate, and happening right now. The BRICS nations are actively building a parallel financial infrastructure, designed from the ground up to work around the dollar-centric system. This is no longer a theoretical idea. For instance, India's central bank recently proposed linking the digital currencies of all BRICS countries. Imagine a world of instant, direct trade settlement between Brazil, Russia, India, China, and South Africa, with no need for dollar conversion. That world is rapidly approaching. Multiple alternatives to the SWIFT messaging system are emerging, powered by everything from blockchain networks to new regional payment systems. Central bank digital currencies are giving governments the tools to conduct cross-border transactions entirely on their own terms. The ultimate goal is financial sovereignty, the ability for countries to trade freely without the risk of sanctions or asset freezes. BRICS is laying the foundation for a new financial architecture, but this new architecture needs a modern, efficient form of money to flow through it. If BRICS is building the new financial highways, then stablecoins are the fuel powering the vehicles of disruption. In just 5 years, the supply of stablecoins has exploded from a mere $5 billion to over $305 billion. That's a 6,000% increase. They are so significant that they now account for 30% of all cryptocurrency transaction volume. Their explosive growth comes from solving a massive real-world problem. International payments are traditionally slow and incredibly expensive. A typical remittance can take days to clear and cost the sender up to 20% of the value in fees. Stablecoins can move that same money across the globe in minutes for just pennies. This isn't a small improvement. It's a complete transformation of how value moves. The change is so profound that even the International Monetary Fund officially recognizes the great potential of stablecoins to make global payments faster and cheaper. This is no longer a fringe crypto experiment. It is becoming mainstream financial infrastructure, accelerating the de-dollarization trend from the ground up. When we put all these pieces together, it becomes clear we are witnessing a structural shift in the global financial system. The US dollar will not disappear overnight, but its 80-year monopoly on global finance is coming to an end. We are moving toward a multipolar financial world, where multiple reserve currencies, gold, and new digital assets will coexist. The evidence for this transition is all around us, right now. Central banks are buying gold at record rates. Global companies are settling trade in Yuan. Entire blocks of countries are building alternative payment systems, and stablecoins are already moving trillions of dollars in value annually. This is not a temporary cyclical decline for the dollar. It is a fundamental transformation driven by a global desire for financial sovereignty and powered by technological innovation. This transition is accelerating today and will reshape geopolitics and global markets for the next decade. This is the story of de-dollarization,